About a week ago, Amazon CEO Andy Jassy published his annual shareholder letter. I read it, and let me tell you, Wall Street is asleep at the wheel. Jassy outlined a master plan that proves we are barely in the first inning of the Amazon story. In this video, I'm going to break down 5 gems buried in the letter that proves Amazon stock is ready to explode. And stick around because at the end, I'll share where I see the stock price a year from now. Grab your favorite drink, get comfortable, and let's get into it. Quick disclaimer, I'm not a financial advisor. Always do your own research before investing. All right, let's do this. Takeaway number 1 is the clean sheet mandate. Right now, every company in the world is slapping the term AI onto their homepage. It's almost like if you don't have AI something or other, you're a dinosaur. Well, most companies are taking their old clunky software and just slapping an AI chatbot on top of it. Kind of like taking a rusted 1990s Honda Civic and duct taping a jet engine to the roof. It might look fast at first glance, but the foundation is eventually going to fall apart. Andy Jassy is refusing to do this. Instead of duct taping AI on Amazon's products, he's bringing in the bulldozers. Amazon is currently the 5th largest company in the world, with a market cap close to $3 trillion. Usually a company that big moves slow like a dinosaur. Imagine a massive 100-story skyscraper. This building represents a nearly $3 trillion legacy tech company. It's fully occupied, the lights are on, and it's generating millions of dollars in rent every single day. Business is good. Suddenly, a revolutionary building material is invented. Let's call it AI steel. It's 100 times stronger and lighter than concrete. How does a normal giant company react? Well, they buy a bunch of AI steel, take it up the elevator, and build a shiny new penthouse on the roof. They take some pictures, put it in a press release, and say, "Look, we're an AI company now." But underneath that penthouse, the building is still held up by 20-year-old cracking concrete. Andy Jassy isn't building a penthouse. He's taking his engineers down into the dark basement of the skyscraper. While the building is fully occupied, he's ripping out the original concrete foundation and pouring this new AI steel directly into the bedrock. To the outside world, this looks like absolute madness. It's expensive, it's messy, and the guys in the shiny penthouses across the street are laughing at them. But Jassy knows something they don't. A massive technological earthquake is coming. And when it hits, the companies that just bolted AI onto their old foundations are going to collapse under their own weight. Amazon is rebuilding from the dirt up. So when the dust settles, they'll be the only building capable of stacking up to 200 stories. Takeaway number 2 is the $200 billion misunderstanding. Jassy announced they are spending a mind-boggling $200 billion on building giant data centers and computer chips. When a company spends that much money, investors freak out. And for good reason. It feels like they're throwing a $200 billion party and praying that guests will show up. If you're interested, I posted a video about Google and Amazon's massive AI spend. You can check that video out here. Jassy clarified that this isn't a gamble or a hunch, but rather a receipt-based investment. Imagine you're a chef and you just bought $200 billion worth of groceries. People would call you crazy, unless every single meal was already pre-ordered and paid for by hungry customers sitting in your dining room. Well, that's exactly what Amazon is doing. They have a massive backlog of signed contracts from hungry companies, including a $100 billion mega deal with OpenAI. You see, Amazon isn't hoping customers will purchase their AI compute. The customers are already lined up around the block with cash in hand. Andy noted that their Trainium 2 chip, which is 30% better price performance than comparable GPUs like NVIDIA's chips, has largely sold out. Trainium 3, which just started shipping at the start of 2026 and is 30 to 40% more price performant than Trainium 2, is nearly fully subscribed. And a significant chunk of Trainium 4, which is still about 18 months from broad availability, has already been reserved. Wall Street is fixated on the $200 billion figure and sees it as a risky spending spree, when in fact it's a guaranteed gold rush, and Amazon is the one selling the shovels. Takeaway number 3 is a hidden secret that is going to create a brand new empire. Years ago, Amazon realized they had built amazing super fast computer servers to run their own website. They decided to start renting out that extra digital brain power to other companies. That became Amazon Web Services, or AWS, which is now Amazon's most profitable business segment, contributing roughly 60% of the company's operating income. And guess who's credited with founding and leading AWS since 2006? Yep, Andy Jassy. Well, lightning is about to strike twice, but this time in the physical world. Andy mentioned in the letter that Amazon now has over 1 million robots operating in their fulfillment centers. 1 million. Jassy heavily hinted that Amazon is going to start renting out this physical muscle to other companies. Imagine you run a factory and instead of trying to figure out how to build your own robots, you just pay Amazon a monthly subscription to use theirs. Amazon is taking the exact same playbook that made them the kings of the internet, AWS, and they're applying it to the real world. Wall Street hasn't even begun to calculate how much money robotics as a service is going to make. Takeaway number 4 destroys the myth that Amazon has run out of room to grow. I call this the 80-85 rule, and it's arguably the most important concept for anyone investing in Amazon stock. Jassy shared 2 simple facts. Number 1, 80% of global retail shopping still happens in physical brick and mortar stores. And number 2, 85% of all global IT spending is still on-premise, meaning these companies are still keeping their data on clunky computer towers in their own dusty office basements rather than in the cloud, AWS. Think about that. For all the cardboard box Amazon deliveries on your street, and for all the talk about cloud computing, Amazon is still only swimming in a tiny pond. 85% of the world's computer data hasn't even moved to the internet yet. 80% of shopping still involves pushing a metal cart with a wobbly wheel. This means Amazon's playground is practically untouched. Every time a business decides to move its basement computers to the cloud, Amazon cashes a check. The runway for growth is unimaginably long. And finally, takeaway number 5, which is the ultimate Trojan horse. The shareholder letter quietly revealed Amazon is now the second largest grocer in the United States. They've officially knocked Costco down to number 3, and they're sitting right on the heels of Walmart. And if you're a skeptic like me, your first thought is, well, they acquired Whole Foods, so wasn't Whole Foods already up there in the top 3? Well, Amazon acquired Whole Foods in 2017, and according to sales figures from 2016, Whole Foods was number 15 on the list if you remove the Canadian grocers. So moving from number 15 to number 2 in a decade is pretty impressive if you ask me. Now, most Wall Street analysts look at this accomplishment and say, well, great, Amazon sells a lot of apples now. But they're missing the physics of why grocery is the most important chess piece on the board. Yes, it gets people to buy more stuff. But the key is they've successfully conquered the hardest mathematical problem in the physical world, the ticking clock. Think about it. If Amazon sells you a flat screen TV or a pair of jeans, that box can sit on a shelf in a warehouse for 6 months. It doesn't rot. It's not perishable. But a carton of milk, a fresh cut of salmon, or a bottle of refrigerated probiotics, those are ticking time bombs. From the moment they leave the farm or the manufacturing plant, a countdown starts. To successfully sell perishables at massive scale, you have to build a supply chain that is aggressively fast and perfectly temperature controlled. By becoming the number 2 grocer in the US, Amazon has essentially put its entire company through the ultimate logistics bootcamp. Jassy noted that they just increased their same-day delivery of perishable goods by 40-fold. So why does this make the stock explode? Because if your infrastructure is so insanely dialed in that you can maneuver a chilled bottle of probiotics through the traffic of Los Angeles and get it to an apartment door in under an hour without it spoiling, then delivering everything else is a total joke. Shipping a book, a laptop, or a heavy barbell becomes frictionless and incredibly cheap. And keep in mind that groceries are just a massive multi-billion-dollar subsidy for Amazon's physical network. Every time millions of Americans order their weekly groceries, they're paying to keep Amazon's delivery trucks circulating through every single neighborhood multiple times a day. And those same trucks are carrying the high margin items, the electronics, the cloud computing hardware, the clothing, basically hitching a free ride on the back of your grocery bill. But here's the final layer, and this is where the generative AI supercycle comes into play. When Amazon masters your groceries, they map the exact consumption rate of your life. They know exactly how many days it takes for you to run out of coffee. They know exactly when you need your next batch of supplements. When you combine that predictive data with their new automated logistics network, the very act of shopping starts to disappear. You don't need to drive to the store anymore, and eventually, you won't even need to open the Amazon app to click buy. Your home will just automatically replenish itself. Amazon is transforming from a retail store you visit into an invisible utility that just quietly runs your life in the background. And in the stock market, when a company graduates from a store to a utility, its valuation multiplies. If you take a step back and look at the big picture, the story is crystal clear. Amazon is bringing in the bulldozers to build the fastest AI from scratch. They have close to $200 billion in guaranteed prepaid contracts. They're about to rent out their army of over 1 million robots to their customers around the world. They have 80% of the global retail market still waiting to be conquered, and they're now the second largest grocer in the US. Amazon stock has been trading sideways for nearly 2 years, and it hasn't appreciated much relative to its Mag 7 peers for the past 5 years. Remember Google in 2022 and early 2023? It was sitting in the $100 range, and everyone left Google for dead. Then it rose from the ashes like a phoenix a few years later. Well, I think that's what's happening with Amazon. It's been trading sideways for years, despite everything happening beneath the surface. Could take months, could take another year, but I think the stock will eventually re-rate. And when it does, it'll be a sudden, massive surge similar to Google. And when that happens, whether it's later this year or 2027, I think we'll easily see the stock double to $500. Yes, you heard that right. $500. So, what do you think? Is Walmart going to eat Amazon's lunch? Is AI just a fad and Amazon is throwing $200 billion away? Let me know what you think in the comments. And if you enjoyed the video, hit that like button. Thanks for watching, and I'll see you in the next one.